Infamous Big Short Burry takes a $1.6 billion bet on the US market about to tank. Hi, everyone, and welcome to another episode of Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, welcome back Branko, who's been looking into this big short or this new big short that's been really causing a lot of discussion and controversy and really a lot of engagement on Twitter. So how are you going today, Branko?
Yeah, good. Good. Thanks, Chris. Thanks for having me back on. Keen to talk about today's topic. It's, typical doomsday news, but maybe not all bad.
Well, let's start off with what is this prediction? Because maybe even a bit of background of who Michael Burry is and why this is causing so much discussion at the moment.
Yeah, okay. So Michael Burry's like the main protagonist of the movie The Big Short. I think we've all probably heard of the movie based on the book by Michael Lewis. He made the big infamous bet in 2008 that made him, I think, billions of dollars. So he's quite a renowned finance investment guru. And he's been known for these doomsday predictions. And he made one, yesterday, basically, where he found out that he has this big short now on the US market.
Yep.
And so obviously the internet was going crazy, Twitter was going crazy. And I think that, a bit of background into the history of this prediction is it actually started, if you want to say, about a year or so ago when he kind of came out and said he expects to have a doomsday multi-year recession. And he originally put a large bet on last year that hasn't panned out yet.
Right.
However, he's significantly added to that, as we'll discuss now. So, there is a bit of worry around if he is correct, because as we'll discuss as well, his track record is quite good.
Yeah. Okay. So there's a bit of a mixed bag there, though, that obviously when you're thrust into that sort of fame by making one good prediction, everyone thinks you're going to make another one. But as you said there, he has had some success, and in some, and others is sort of maybe been a bit early on or haven't really come through. What is his portfolio composition currently, if you know any of that, and how has he sort of changed that recently? Have you got any sort of background on what
Yeah, so right now he's 93% of his portfolio is basically short US equities, which is obviously an insane amount. And also, he recently sold two Chinese tech companies, Alibaba and JD.com, which were about 20% of his portfolio, and basically dumped that all into shorting the US market. So quite a significant change to be kind of pro-tech, especially because tech is obviously highly correlated to stock market gains, right? It's more risk on when the stock market's doing well, tech companies tend to do well as well. So quite a stark change to get rid of that, to just go all short, which is what he's done, 93%, which is huge.
That's really interesting as well, because we've had lots of discussions here over the last few weeks about the uncertainty that's just building. It feels like it's building in the market. And it's really this prolonged period of low volatility where we've had week after week of not really that much happening other than the market just nudging higher when everyone sort of thinks it should be heading lower. So he's really calling the end of that, like to place a big bet. He's saying, no, that time has come. Even though we've all been saying it for a while, now is the time where the rubber's really going to hit the road and it's really going to happen. So maybe can you give us a bit more of an idea of his history of getting it right? So should we be, how much sort of weight should we be giving to him here based on his history?
Yeah, so outside of the big bet 2008, he's actually been right quite a lot. And I think I've got some stats on here. So basically 2001, in 2002 and 2003, he significantly outperformed the S&P. So in 2001, the S&P lost about 12% and his firm was up over 50%. Similar thing happened in 2002, S&P down 22%. His firm finished up about 16%. And then in 2003, a similar thing, the S&P didn't do very well and his firm finished up about 28%. So consistently, he seemed to, at least during that brief period, which was after the tech boom, the tech crash, so during that kind of bear market, he's significantly outperformed the market. So I think he does have this credibility. Obviously, in 2008, he has that massive decision which made him billions of dollars and made an incredible movie. Would absolutely recommend everyone watch the movie. Great movie. And this most recent one, prior to the one that he's kind of added to today, was another bearish decision to basically call this multi-year recession. So he's consistently been a doomsday guy, but he's also consistently outperformed the market during these times as well.
To be fair, that is actually the hardest bet to make, right? Like, we know that the governments, particularly with the amount of debt that we have, and this cycle that we continually go through of more debasement of currency, more money printing, markets go up and to the right over the long term. Like, I think everyone agrees on that, particularly when you're talking indexes like the S&P 500 or the NASDAQ. So we know that long term, they're going up and to the right. So to be fair, it's actually very hard to consistently outperform when you're betting against that happening, because we all know that long term, that is what's going to happen. So that probably is some credit that needs to be given there, even though I know there are some people who just like to be doomsayers all the time, because it looks great when they get it right, but they can be wrong for a very long time before they do. So I suppose bringing that to a question, how should we prepare for this? Should we prepare at all? You've sort of said he's got that track record that at least warrants some thinking about what he's saying. Like, is that something that we really should be taking on board? And is there stuff that we should be doing?
Yes, I think the key point with this would be, as we kind of saw in 2008, these things do take a long time to play out. So I think once he actually realized the economy was going to be in shambles in 2008, it took him like 2 or 3 years before his bet actually started to pay off. And the insurance premiums that he was paying was actually taking a large toll in their income, and he had to write it to the investors, and it was very difficult. Eventually, when it paid out, it was fine, but it did take a while. So the key thing would be to not to worry too much in the short term, because these things do take a while. However, given his track record, he's not a normal doomsdayer who's coming out and saying the market is going to collapse, like a Robert Kiyosaki or something like that every 2 seconds. And then when it happens, finally the old will put his hands up, look at me. In reality,
told you so.
50 years. But this guy is very targeted. But again, even him, it does take time. So in the short term, I think it's going to be fine. But in the back of our minds, we need to, keep it in the back of our minds, and maybe in the long term, adjust our portfolio or just prepare it any way we can.
Yep. And I suppose that's something that we do as, precious metals people. We're always looking at that angle as well, that you can effectively argue pretty much all the time, but particularly in environments like this, that having some diversification in assets that sit outside of the system really can pay off when you get that big volatility event, that big crisis event where people are just rushing to the exits. You want to be there before that happens with some sort of insurance in your portfolio, and that's something we would always argue is the role that gold and silver plays.
100%. I mean, to tie to precious metals, basically in the short term, is gold going to go up as a result of this? Probably not. But in the long term, is there a higher chance that gold, given this man's expertise in kind of predicting recessions, that gold is going to thrive in the long term? I mean, there's a much higher chance now if he sees a recession like we did in 2008.
Yep, and that's that sort of old saying: you'd rather be, a day early than a minute late. When you're looking at things like insuring your portfolio, because when the move starts to happen, and that's a good point that you raised, because often, particularly gold, initially in these sell-offs, gold can sell off as well, but it doesn't stay there. So when the market continues, it then starts to rally right out of that. And I think sometimes it doesn't matter if you're a little bit early. It just matters that you have that protection.
Yep, absolutely agree.
Yep. All right. Well, thank you for that today, Branko. It's an interesting one to look at. Someone in the market who's really, what I like particularly about this example is that he's putting his money where his mouth is. There's so many analysts out there who tell you, the world's ending or that we're going to the moon. It doesn't matter what they, which side of that they take, but there's not really any substance behind what they're saying, because their words aren't really worth anything. But when there's a big bet on the line, well, you really have conviction there, so that's worthwhile, I think.
Yeah, great point. He's putting his money where his mouth is, so he has strong conviction. So I think we need to take it more seriously than
than otherwise. Yeah.
Yeah.
Well, thank you for that.
No worries. Thanks, Chris.
All right. Thanks everyone for watching. Remember, reach out with any questions or comments on the social platforms. That's us for today. We'll be back next week with Alex on Tuesday at this stage to discuss all things markets and metals. Until then, have a great rest of the weekend.